For the report?
Yeah.
Oh, yeah.
Yep.
We'll say the pledge. Study session. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. All right, Corey, whenever you're ready.
Thank you, Laura. It's great to be here. And my name is Corey. Whoa, let's put this back a little bit. My name is Corey Waddell. I'm Director of Consulting at Capital Cities. Great to be back in front of you all. So I've got their third quarter performance and evaluation report, as well as our annual fee study on the investment program for you today. We'll start out with the performance and evaluation report, though. If you could flip to page 2. So brief overview of the third quarter investment markets before I hop in and show you what the Porter County portfolio did. If you direct your attention to the middle of the page there, those bars represent equity market returns for the third quarter period. You can see all positive on the blue, which is the last quarter, and also gray, which is the last 12-month time periods. Really, on the far left-hand side, you can see the S&P 500 advanced almost 6% for the quarter, and again almost up 37% for the trailing 12-month time period. So all equity styles positive. We've seen a strong market. A little bit of a narrative switch in the third quarter. We had seen growth stocks, namely large cap growth stocks, really driving the investment markets. That changed in the third quarter, and we saw small caps as well as value catch up. And that was nice for the overall investment market to see a little bit more broad returns than just those Mag 7 names really driving all performance. On the bottom of the page, if we look at fixed income results, same story in the fact that we have positive results across the board on the last quarter and trailing 12-month time period. The broad proxy we use for U.S. fixed income is the fourth column over. It's that aggregate index. You can see it had a really bullish quarter. It advanced 5.2%, and now over the trailing 12-month time period, up over 11%. So really the catalyst for the strong fixed income market in the third quarter was the Federal Reserve finally deciding that they were going to cut the federal fund interest rate. So that happened at their September meeting, and accordingly yields in the fixed income marketplace declined. When you see declining yields, you see positive performance. So that was really the story that drove fixed income in the third quarter. And that was really also the dominant economic or investment narrative for the third quarter, and continuing into the fourth quarter as well. This Fed policy, most of 2024, investors have been waiting for the Fed to cut interest rates when and if they would, now that inflation has abated or come down from its 2022 highs. So again, the Fed finally did that in September. They did so not only in a not only did it do so, but they did so in a 50 basis point increment, which was, somewhat of a surprise to the market. The Fed also cut interest rates in November, and we're expecting another interest rate cut here in December. Into 2025, we're still expecting that, the path of interest rates is lower, which should be a tailwind for investment markets. However, the Fed is going to continue to be really data dependent before each and every meeting. The election also caused a little bit of a pullback in terms of forward-looking interest rates, just because, again, the Fed is going to wait and see what new policies the new administration might have on the fiscal side that could or could not impact inflation. If we can flip ahead to page 6, I'll show you where the Porter County portfolio ended for the quarter. There in the middle of the page, you see the blue bar that represents the total assets as of the end of the third quarter. We ended at $197,383,000. Down at the bottom left, you can see some summarized performance for the total portfolio. We did participate in the both strong equity and fixed income markets with the portfolio advancing 5.4%, a slight lag on the evaluation benchmark. And then you can see also year to date, so Jan 1 through 9/30, we're up over 12%. And then the trailing 12 month, 22% out of this portfolio. Again, with a portfolio that only has 55% allocated to the equity markets, been a really favorable investment landscape over the last 12 months with how fixed income has also aided performance, and especially relative performance. So the slight drags you see there relative to the passively structured evaluation benchmark namely come from your active equity managers. Have had some slight challenges over the last 12-month time period, but your active fixed income managers have actually outperformed and caught up for some of that. You do see one blank spot there, the Western Asset Total Return. Just as a reminder, this was a fund that we eliminated in the third quarter. We actually reported on this last meeting, given the timing, but you're just now seeing it in the report. But there were some operational or personnel issues at Western last quarter that led us to eliminate that. And so this will be the last quarter you see Western referenced throughout.
Can I just ask you a question?
Absolutely.
When you're looking at the evaluation benchmark, does that benchmark include fees or expenses or anything like that? I mean, are we really comparing, are we really fairly comparing our return to the benchmark? Or is the benchmark just what the index did without any fees or anything associated with it?
So yes and no. So the benchmark itself doesn't have fees in it, but the performance that you see reported of the portfolio is net of fees.
Right.
So,
but that's taking into consideration fees, whereas the benchmark has no fees. So when it shows us being slightly less than the benchmark, it doesn't take into consideration that we're also paying some fees, correct?
It's an apples to apples comparison how we show it. I'm not sure if I'm answering your question correctly.
Okay.
But the benchmark itself not charged any fees, and then we show the performance of all of your managers after all of the fees have been paid.
Right. So that means you've taken into consideration that we've paid you some fees, but the benchmark doesn't have to take that into consideration, right? Because they're not paying any fees to you or to anybody.
So our performance is maybe a little better than it looks compared to the benchmark.
Is that?
Yeah.
And I can actually show you. I was going to show you a longer time period relative to the evaluation benchmark as well. Because I think that's more impactful. But definitely following now. I apologize. On the bottom right-hand side, also, we just like to always report on the rebalancing of the portfolio. As of the end of the quarter, slightly overweight equity at 27 or at 2.7%. Just as a reminder, we let the portfolio drift plus or minus 5% either direction, and we check in on that every morning. On page 7, this is where we check in on each one of your investment managers, where we have our investment stoplights. Really, the only managers that we're watching currently are the AQR Large Cap Defensive Style and the Wasatch Ultra Growth Fund. As a reminder, the Western Asset we pulled out in August, and you see that as a red dot representing we've taken action. So the AQR Large Cap, again, it's a large cap fund that's had a little bit of underperformance relative to its index over the 3 and 5 year periods. This is something that's been very explainable given its structure. It can only invest 1.5% in a single issuance, which means it's going to be a heavily diversified portfolio across its names. And that also means it can't hold Microsoft and Apple and Google in 7 or 8% market cap weights like they currently represent in a lot of large entities. And those have really, again, been driving a lot of returns over the last 3 to 5 years. So this style has been out of favor, but it's also been super in favor when we've had pullbacks. It was your best performer in 2022, for example. So it definitely complements your passive management, but again, it's just been out of favor. And then the other one is the Wasatch Ultra Growth Fund, which we put on watch list status 12 months ago, so 1 year ago. Since that time period, that fund has advanced 20%. We really didn't want to sell at a bottom last fall, and we also think that this fund is one that should benefit from the monetary easing that we're expecting to see continuing out of the Federal Reserve. On page 8, again, this is where I wanted to show you some longer time performance. If you look at that top page, we look at your performance relative to a couple benchmarks. So we've got your evaluation benchmark, which is a passively constructed blend that matches your asset allocation. And then we also have your performance target as defined in the investment policy statement as 5% each year. And so we can look over longer time periods. And again, since inception, the portfolio's been up 7%, dating back to early 2017 on average, again, beating the evaluation benchmark net of those fees, and then also eclipsing that performance target. And then I want to show you one more slide on performance, page 10, because this really shows that since inception through kind of the ebbs and flows of the markets. And so, we invested this portfolio back in 2016. You can see the net deposits and withdrawals there at the bottom of $100 million. The performance from the portfolio has been cumulative 78%. If you translate that into earnings at the bottom, it's that $96 million that's been gained from just keeping this portfolio invested per the policy that we all agreed upon initially, and not getting emotional through these ebbs and flows. And that's really the theory and logic behind keeping a firm asset allocation and a risk target time. So again, always just like to go back to this because it really emphasizes the plan that we've all put into place. Are there any questions on performance before I switch gears and show you information on fees? So we would just switch to the other presentation. And we can land on slide 2. So as a reminder, this is an analysis that Capital Cities performs annually for the foundation, and it's a key fiduciary aspect that we all have as fiduciaries of these assets to check in on fees each year and make sure that we're not paying undue fees. And so there's really 3 layers of fees that the investment program is exposed to. We have the investment management fees that make up the largest portion dollar-wise of the overall fees in the portfolio. These are the fees we pay to the mutual fund managers that get netted to performance for buying and selling of the stocks and bonds in the portfolio. We also pay Charles Schwab, the custodian of the assets, to safekeep them, also do performance reporting statements, and also serve as the book of record. You also pay Capital Cities for our third-party advisement of the assets. Just as a reminder, Capital Cities has no affiliation with any of the other service providers within the portfolio. Also, as a reminder, the way that this is structured, we'd call this an institutional framework, meaning it's open architecture. Whereas, if you have a one med player in any one of these layers, you can quickly pop one out and pop one in, versus having an all-in-one provider who might be doing management, custodial work, and advisory for you. It's harder to benchmark those services. So what we're going to do on the next couple pages, benchmark each one of these fees and then tally them up at the end. So page 3, first on the investment management fees, There's a couple things that we look at each year. First, we want to try to minimize the total fees when we average all of the managers across. We're always making sure our clients are invested in the least possible share class. So investment managers are constantly coming out with new share classes that might only be eligible to certain investors or certain asset levels. We want to make sure you're in the least possible share class you can be in. And then finally, we want to always be checking your managers relative to their peers. So we don't want to be paying a large cap value manager 3 times what the average large cap value manager is charging in the marketplace. And so on the next page, we hone in on that peer group analysis. So just as a reminder, we have active and passive management within the portfolio. So up at the top, we see the passive fee schedules listed. You are invested in a Schwab S&P 500 index, charges 2 basis points or 0.02% annually, and then also a developed world index that charges 3%. So again, those are tools that we can use to minimize the total exposure or total fees and get broad market exposure within the portfolio. The rest of the bullet points are relative to your active managers and how they compare to peer groups. Those are documented on pages 5 and 6. I won't take you to those, but the story is basically that all except one of your investment managers are ranking below the median of their investment peer groups. The one manager that's more expensive is Prospector, which is coming in at 126 basis points relative to a median at 94 basis points. We did hear some good news from Prospector 2 weeks ago. They're changing their fund administrator on a firm-wide basis, and it's impacting all of their strategies fees. And so that fee is going from 126 to 116. It'll still be slightly above the median, but again, what we seek to do is make sure that the majority of your managers are ranking below their peers. Prospector, again, has been one of our more favorable managers, and we think slightly above fees are okay there. On page 7, this is where we document the custodian fees that we paid Charles Schwab. Charles Schwab is an excellent resource for investors that are utilizing mutual funds for their investments, and also ones that have a third-party advisory relationship as the Porter County portfolio does. I say that because they don't charge any fees or any assets or any asset-based fees. So 0 basis points on all of the assets held at the bank. This differs from a lot of more traditional banking relationships where you might have a service provider and you might pay 1 to 2% or 1 to 2 basis points on your assets. So we're just paying mutual fund fees to Charles Schwab, and this continues to be the least expensive option for this type of portfolio. On page 8, switching gears, we look at the investment consultant fees. And so you can see our transparent fee schedule stated there at the top. We charge the foundation a flat fee of $65,000. So our fee will continue to go down in terms of basis points as the assets grow. We're not charging a flat fee or that will continue to rise as the assets appreciates. We feel our fees are appropriate, but that's obviously for you all to say. But we believe that our services go above and beyond normal consultancies. We always strive to bring a special project to each one of these meetings that not only covers performance, but then also covers one of the key fiduciary aspects that this commission is required to each year. So not only the fees, checking in on those, but we check in on the investment policy statement each year. We check in on the asset allocation to make sure our risk targets are applicable each year. And then just as a reminder, Capital Cities, we really only do this because we like to be objective We like to sit, even though I'm not doing it right now, we like to say we sit on the same side of the table as our clients. And we really say, this is what we would do if we were you. And we can only really say that if we don't have any relationships with any of the other people in this industry. And so we're here for you as your watchdogs on this account. On page 9, what we do is then we add up each one of those layers to give you an estimation of your total annual fees. And this is on a trailing 12-month ending September 24th. So last October through this September. Again, the lion's share of that dollar value of fees comes from investment management. You can see that on the left-hand side. We estimate that it was just over $850,000 last year. Again, this isn't a fee that's getting paid. This is netted out of performance, so it's not something that you see. But we estimate again at 46 basis point. The custodial fees came in at just $160 or 0 basis points, and then total fees for the consultant, again that flat $65,000 this year was calculated at 3 basis points. All in at $918,000 or 49 basis points for the year. Which again, given your asset allocation, given your that you're paying for a third-party advisor, very competitive fees. Are there any questions with the fee study?
Any other questions? Okay, thank you.
Yep.
Very good.
Anything else tonight?
Nope, that's all I had for you today.
Great, thank you. Great.
Thank you all so much.
Thanks.
Christmas.
Yes, Merry Christmas to you guys.
Drive safe.
Safe travels.
Okay, so that was study session. We didn't have a quorum. I need to officially bring the meeting to order and real quick.
Commissioner Blaney,
Present.
Councilman Rivas, Councilman Bozak, Councilman Vasquez, Councilman Stone.
Here.
Councilman Sims,
Present.
Commissioner Biggs, Commissioner Wrighton.
Here.
Councilman Brickner.
Here.
Councilwoman Graham.
Here.
6. You have a quorum.
Okay, we did the pledge already, so we'll move forward with the approval.
I make a motion. We make approval of the minutes.
Second.
All those in favor say aye.
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 Opposed, same sign. Motion carries. Did capital cities? Do we have an attorney's report, Scott?
We do not.
Okay. The County Regional Airport Authority decided, after some conversation, to come back at the beginning of the year. We'll have new leadership here, a couple new board members, and there were a lot of unanswered questions. Attached to your agenda is the information that they brought for us. So I would encourage you to look at that between now and the next meeting. So if you do have questions, they can get answered ahead of time. And I think what they're proposing would be really good for Porter County and for the foundation. And I would support it if I was still going to be here. On that same vein, I told them I would suggest that you guys make your first meeting a little sooner than we usually do, so there's not a leadership void until March. So some of these questions can get answered, and if there are things to get moved on, we could get moving. So I don't know if you want to set the meeting date now, or if you guys want to do it later. It's up to you. Maybe just reorganize in January. Do you guys, when's the council reorganization? January. The first Tuesday?
First Tuesday.
Do you want to try to do the foundation reorganization at that time as well? It would be on the 7th. The 7th?
I would have no problem with that.
All right, well, let's go ahead and schedule that. And then Andy can run that meeting. Okay. And then, obviously, it's almost 5:30 already, so maybe when you do get them on the agenda, start a little sooner. Okay, we have approval of claims for capital cities. Do I have a motion?
I make a motion.
Second.
Motion and a second. All those in favor say aye.
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 Opposed, same sign. All right, motion carries. And the audit of financial statements, approval of claim for Katz, Sapper, and Miller.
I make a motion, we approve.
Second.
Okay, all those in favor say aye.
Aye. Aye.
Opposed, same sign. Motion carries. Do we have any public?
Wait, before we do that, Joy. Okay.
Oh, Barbie shit.
Oh, that is very nice. Beautiful.
Well, saying goodbye is hard. Really appreciate all of your efforts, all of your efforts. So, we'll miss you and come back. Anybody else?
Thank you. It's been a pleasure and an honor to be. I've especially enjoyed the foundation. You've done some really good things, and
I agree.
expect that you will do more good things moving forward, including things like this airport deal.
Next time we see you, might be a lawyer.
I might be a lawyer.
That's it.
Probably have a big smile. On my face.
No, she won't.
All right, public comment. Thank you very much. Anyone? I didn't know if you were here. No. All right. Well, for my final time, meeting adjourned. Enjoy your council meeting.